I want to ask you about the IPO market. This is another one of Nelson's pieces of a portfolio that you have to manage on top of ETFs. You also manage a substantial IPO business here at the NASDAQ. We've had 3 subpar years. I've been covering IPOs since 1997, so 27 years. I don't remember a worse 3 years in terms of total amount of capital raised. It was below 50 billion again for 3 years.
You can't, because there hasn't been.
Yeah, I don't think there has been. Give me a reason to be optimistic in 2025.
Sure. I think you look at starting from 23 was probably one of the worst years we've had in a long time. 24 was just a bit better, and at the same time you had an amazing market backdrop with strong index performances, right? But it was pretty heavily weighted, but started to broaden out last year near the end of the year, and the deals went out that did fairly well, did very well. So we have a track record now, and 25, if you look at 3 straight years of having limited capital raised in the public markets, there's certainly an enormous pipeline, and I think it's going to be another kind of going from a really tough 23, a better 24, now a good 25, not a floodgates, but I do think we'll start seeing things really start to pick up more in the back half of the year. But even the first half of the year, we're starting to see some activity already.
How do you deal with this private equity problem? I don't mean from the ETF point of view. I'm just mean we've got so many tech companies that seem to be very happy sitting there, get funding to stay private. What will get them incentivized to go public? I hear this endless whining. Well, there's too many regulations. We don't need to go public. And number 2, we're getting a ton of money. Look what happened to Databricks. They basically just said we've just raised a whole bunch of new money. They don't look like they're going public anytime soon. And that was a big candidate. How do we get these companies incentivized to go public?
And there is a massive, I guess, convergence of public and private, because even in the private space, you can now have access to more liquidity. But if you want deep, sustained liquidity, you need to go public. So at some point, companies do have on the roadmap to go public. And I always kind of say the pendulum can kind of swing one way or the other. It has swung to privates, but as you look at just the markets kind of coming back, deals start doing better, valuation discounts kind of compress a bit, then the public markets get healthy again. So I don't think we're in this sustained, hey, this has changed forever, but certainly we do see more activity in the private space than we have and more innovation there too, in terms of how companies can get liquidity, how they raise money. So I do think we have to look at how do you broaden access to the private markets is probably your next big trend. Private wealth, those other areas.
So we see this already. We look at the ETF industry tying itself into pretzels, trying to figure out how to access private equity and private credit. We've seen some deals out there being floated that are a little bit on the questionable side about how are you going to have a fundamentally illiquid product trade in an ETF wrapper. Are they going to be able to crack this nut? Do we even want them to crack this nut?
I'm not terribly sure you do without further build out of private secondary markets until you can get clearer information on what the value of a company is, what the price of it is. I can go on the internet right now, I can get 5 different quotes on a specific private company, and I don't think that's acceptable. And the dispersion, what I mean, is extreme, right? If they're tightly knit in terms of the bid and ask, fine. But when I start to see $20 type differences, that's not exactly the most helpful thing.
NASDAQ runs one of the most successful private markets operations out there.
It's transparency, it's data, and then more efficient ways using technology to get liquidity. So I think we're still in the early days of that, but it is certainly, if you go back, I don't know, 7, 8 years ago when it started to develop, it has certainly come a long way.
But you know what I'm saying. I mean, I know you run NASDAQ and you're a business guy, but I'm a public markets guy. Isn't it better for companies to be public than them getting squeezed into these private markets and all of our viewers trying to figure out how do I get in on this because I'm not a qualified investor or whatever. I'm not. I mean, that's what frustrates me. I want more companies to be public. In the 90s, we had companies going public that they argued were too young and they were too volatile. Now we have companies that are geriatric, that are out there, that have been 15 years sitting there, private, and they come public, and they're already middle-aged companies. That's the other side. That's worse than going too young.
We're on the same page here. We love to see companies go public more often. We'd like to see them look at the public markets as an opportunity to truly thrive. I do think when you think about the regulatory pendulum, it has swung a bit too far in terms of over-regulatory aspects of the public marketplace, and there's an opportunity now to say what are the things around proxy access, the proxy process, the different rules that come out of the SEC. Can that be done in a framework that still protects investors, yet doesn't overburden companies? So I think that's an opportunity, and we're very hopeful that this is a moment in time to do that, and we advocate for companies all the time at NASDAQ to do that.
Let's hope it is. Let's hope finally we start seeing some of these companies come out. It may be we need to have interest rates go up. It may be that some of them just need to, some of these private equity and other companies that are funding them need to say no more money. That may get them going. I don't know. All I know is I want to see more companies go public, and of course here at the NASDAQ. Thank you for inviting me and hosting me.
Amazing to have you here, Bob.
Really appreciate
really
it.
great to have
Thank you. It's been a long time here. That does it for this week's ETF Edge. My thanks to Nelson and to Todd. Now, we've asked Todd to stick around and provide us a broader perspective on the trends in ETFs this year and on the IPO market as well. That's going to come up on the ETF Edge podcast. And remember, you can still see all of our shows. It's on our website, all of them, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.